What's up, everybody? Good morning, good afternoon, good night. Welcome to the BitLab Academy daily stream. My name is Kellam. Welcome to the show. You can find all my information right there at Kellam. I actually started a Threads account yesterday as well, not because I really wanted to, but because I specifically wanted to make sure to prevent anybody from jumping on setting up a fake name if I hadn't taken it yet. So you can find me at the Threads. I have a link on my Twitter page, which is just like all my socials. It's just right here at Kellam. You can see right here at KELLYKELLAM. And if you scroll down, you can see right here, there's a link, not this. This is, I was just showing the addresses. This was not meant to be an at here, but you can click on this. That's where you can find me on Threads. If you're on there, I'm basically going to be sharing carbon copy of what I'm sharing on Twitter. But if you want to test that out and connect, just make sure you're connecting with the right person. But getting back to the show, how's everybody feeling today? We got a lot of early birds in the show. Before we even started today, we had just around 80 right when we went live. We got 95 now, and only 55 of you have hit that like button, have subscribed, have dinged the bell. So what are you doing? Get involved. Get involved with the stream, get engaged, because it doesn't just help this channel. It's the easiest way you can help this channel, but it also lets YouTube, one of, the modern day mass media outlets, let's be honest, lets them know that you like crypto content, not just mine, but all crypto content. So go ahead, hit that like button and get involved. We got a lot to talk about today. As you all saw, I'm sure, the thumbnail, I did not mean for that to be clickbait. It's a direct relationship with what's going on with the narrative of Bitcoin in the space. The #1 asset manager in the world, BlackRock, is basically giving the absolute stamp of approval to world's markets, to small family offices that have assets under management, that banks, people that have been on the sidelines. Everybody's been calling it a scam for not everybody. Let me rephrase that. Large players in the space have been giving a lot of pushback on Bitcoin and digital assets over the last 10 years. And I've talked about this a lot on the show. So if you're not watching it, what are you doing? We talk about all kind of stuff on the show. We break down, we bridge that gap from beginner to pro to make sure everybody has the proper tools to navigate the space and the proper mindset to do it. Strategies, skills, all the things you need to do to really navigate this space in a meaningful way so that the space doesn't navigate money out of your portfolio. So BlackRock, over $9 trillion assets under management. What does that mean? I think their value of their company is around a little over 100 billion. I could be wrong, but I think it's around 100 billion. But in terms of the assets under management, that means the funds and businesses that they own, that they're also basically managing for their customers. But they're not the only ones, but they are the biggest player in world markets. In fact, their assets under management eclipses every country in the world's GDP except for Bitcoin. Bitcoin. I said that yesterday too, except for the US and China. That gives you an idea of how powerful the decisions are and how meaningful they are when they choose to move into or out of a certain sector of global markets. And they've been giving a lot of pushback on Bitcoin, on digital assets. And now we all know they filed for an ETF. But in addition to filing for an ETF, this comes to no surprise. Some of the comments that were made yesterday from Larry Fink, the CEO of BlackRock, and some would argue maybe one of, in some aspects, on the same par as many, if not bigger than most of the world leaders. So the decisions that they make, the words that come out of their mouths, have a huge impact on the disposition and consideration and narrative around different assets within the space. And now they've given it that stamp of approval. Let's go ahead, before we go any further, let's go ahead and jump right over to this page right here. And let's just listen. It's a quick clip. We can listen to what he's saying. I want to make sure that this is unmuted. Charts screen. Okay, unmuted. Let's go ahead and listen to what he's got to say. And this is as bullish as it could be.
And also, I do believe the role of crypto is it's digitizing gold in many ways. Instead of investing in gold as a hedge against inflation, a hedge against the onerous problems of any one country, or the devaluation of your currency, whatever country you're in, let's be clear, Bitcoin is an international asset. It's not based on any one currency. And so it can represent an asset that people can play as an alternative. I would call the foundation of BlackRock is about hope. You invest for retirement because you believe tomorrow is better than today.
So what is he saying there? He's supporting a narrative shift to give credence to what the decision was to go into the Bitcoin ETF, to put an application in for a Bitcoin ETF. Now, this is important because there are not tens or hundreds, but there are thousands, if not tens of thousands, if not even more than that, of smaller asset managers, okay, that have been on the fence and what their guidance should be to their investors, to their clients, to the people that have money that they're managing. I'm sure a lot of people all over the world in these different family offices, meaning smaller, non-major custodial offices, you know, they have over $9 trillion in assets under management, but you know, most small family offices may have several million or, you know, up to, you know, 10 or 20, maybe 100 million. But there are tens of thousands of these around the world that have been basically suppressing liquidity that they're managing coming into Bitcoin because, one, they didn't understand it, and two, it didn't have a clear narrative around it that had that stamp of approval. And now Larry Fink, the CEO of the largest financial institution in the world, BlackRock, not only put in basically a spot ETF application with the SEC, there's high speculation that there's more probability than not that this ETF is going to go through. And once that happens, there's going to be a domino effect amongst other large financial institutions, basically racing to keep up and stay ahead of the rest of the pack. And it's not just them getting involved, having an ETF, but it's also buying the Bitcoin required to support the liquidity for the ETF. So it's not only are they giving the stamp of approval by getting involved with the ETF, putting in the application, but also we see you know, PR like they're doing right now, basically letting people know it's okay, this is a good thing. So then once they do get approval and once the floodgates essentially, hopefully the floodgates open, that it's not just them, but they're ahead of the pack. Other people are aware, okay, if you want to get involved with Bitcoin spot ETF, this is where you want your money. And it's not just going to be them. We're going to see ARK Invest. We're going to see Invesco. We're going to see Vanguard. We're going to see, I mean, the list is incredible. But there are some things we should pay attention to. Before we get into those things we should pay attention to, I do want to just bring this up right here. What does it mean if we get the spot ETF and we get the domino effect of potential liquidity that could come into the space? Well, let's just look at this. This is the world's top asset management firms. Okay, we got BlackRock, of course, at the top. Then we have Vanguard, and we can see right here, this is 9,000 what? Billion. 9,000 billion, what is that? Trillion. So over $9 trillion from BlackRock, over 7.6 trillion from Vanguard, over 4.2 trillion from Fidelity, 3.6 trillion from State Street Global Advisors. Morgan Stanley, over 3 trillion, JP Morgan, 3 trillion, Goldman Sachs, 2.6 trillion. And they just had some positive words to say about Bitcoin as well. And then we got Credit Agricole, 2.6. I mean, look at this list, just keeps going. This is 65, and the 65th place down still has $466 billion in assets under management. And 65, if we average this out, this would be a staggering number. And then we think about not them putting 15% or 20% or 100%. That's unrealistic. We need to be realistic. So even if we looked at this and was like a 0.25% allocation from these trillions and trillions of dollars in assets under management just in this list here, not including all the small family offices, then that is a staggering amount of liquidity that could be coming into the space. Staggering. Now, everybody talks about when we're looking at Bitcoin, if we actually pull up, let's actually pull it up right now. Everybody talks about when we look at, let's go ahead and double click on this, and then we'll go to weekly. And that's not the chart I want to look at because it's not going to have a lot of, there we go. Let's look at so everybody looks, what this is looking very different. Let's go ahead and do another one. BTC, let's do BLX. BLX. Okay. This doesn't look right here. Why does this look so? This is not what I want. BLX. Oh, I want stocks. I was like, that's not the crypto. Here we go. So this is what I want to look at. So everybody's talking about the diminishing returns, meaning you see how this is rounding right here. If we also look over here, if we go to look into bitcoin.com, we can come down here or up here on the top right. Let's go to charts. And let's go to, what do I want to look at? We can look at the rainbow chart. Where's that at? Rainbow chart. Are my eyes not working? You guys see this somewhere? Doesn't matter. Bitcoin rainbow chart. Here we go. So what we can see here is we see this basically diminishing, sort of diminishing returns. The volatility is constricting over time. And I have another graph, another chart that I'm going to show you here in a moment. And people are expecting this to continue. And in this case here, this basically April 2021, when we had the Chinese Bitcoin mining ban, a lot of people were expecting this, the price action to at least get up into this red zone here. Maybe not go all the way to $200,000, but at least attempting $100,000. And we got truncated by this, Chinese mining ban. And at that point, I think the Chinese region was responsible or had control of about around 30% of the mining power globally. So this was a pretty drastic shock to the market. And so, of course, we had this secondary sort of push up, which is, in my opinion, a bit of a false push up. It was sparked more by the strength of holders than actually new retail, new interest coming in and having buying pressure pushing this up. I just think it actually was so many people waiting for that $100,000. People were not willing to sell. Now, whatever the reason is irrelevant. My argument here is that although we are seeing this rounding top here, I do think over time, that is going to be the narrative. I think we are going to have reduced volatility over time. And so as time progresses, you have less of an opportunity to take advantage of an emerging asset. However, with that being said, I will also argue that because, or if and when the spot ETFs start to get approved and we have that domino effect of different asset managers like BlackRock, Valkyrie, JP Morgan, I was about to say Credit Suisse, no longer, Deutsche Bank, the Bank of America. You just go down the list of all of those, all these asset managers that we talked about a second ago. Deutsche Bank, Morgan Stanley, Franklin Resources, Prudential, the list goes on and on, Goldman Sachs. There is going to be a beginning, I believe, and I believe we're seeing the early stages of it, of liquidity pouring into the space that's driven initially in large in part from institutional investors, large investment firms, family offices, as the sort of wildfire of awareness of Bitcoin and the promise that it provides and the access to a different future that Bitcoin provides. Liquidity is going to be pouring in. And that's, the smart money tends to look at fundamentals. They tend to look at data and they buy based on those things, not specifically just because the market broke previous all-time high. And I'm telling you right now, every single one of you that is already involved in these markets, whether you have exposure or not, maybe you're here just learning, waiting to get in, you are miles ahead of the average retail investor. The majority of people, as this market moves forward, the majority of people, we're going to see a massive influx of new addresses and new people in the space, new adopters. After, unfortunately, it's fortunate for people that are already in, but most people are going to get in up here. Like once we break these previous highs, this is where you get the massive influx of new retail. A great way to point this out, if we come over here to my Twitter page, if you're not following me yet, what are you doing? Get in here, follow me at Kelly Kellam, Kelly Kellam. Look for the blue check, look for the hit logo. But this is a chart that I drew up at the beginning of the year And essentially what I've outlined here is different types of participants in the space. Essentially, dumb money buyers, smart money buyers. You see these greens? Smart money buyers. Dumb money says, oh, market's down, I'm not going to buy. Smart money goes, you're a freaking idiot. When it's down, that's when you buy. How come in any market in the world? How come? And I'm going to borrow this thought from Mark Yusko, brilliant mind in the space, also the CEO of I think Morgan Street Capital. And what he says is, how come in any asset or good in the space, other than financial markets, if something goes on sale, you get a flood of people buying it? Think about Black Friday in the US. Embarrassing as an American to see people stampede into Walmart to get a little bit better prices. The prices are already pretty damn good at Walmart. If you're fighting over getting that extra 10%, you need to go out and not trample somebody in a store to get in there. You need to go out and get another job, or you need to figure out where you're spending your money. Maybe you don't need those Nikes. Maybe you need to be smarter with your money. But my point here is, with almost any good or service out there in the world, when the price falls, people flock to get that opportunity. But in financial markets, whether it's Bitcoin, whether it's Apple, whether it's Twitter, whether it's Tesla, whether it's the price of a taco, when things go on sale, people, when things go on sale in traditional, not even traditional markets, when things go on sale with tangible goods that you can touch, people flock to it. But when the things that can create the best opportunity in your life, like investments, when the price drops, people run away and they wait. Coming back to this chart, they wait until we break this previous all-time high, and then they still are on the fence, and then it starts running. They go, oh man, this must be something to get into, man. No, this is where smart money is selling. Smart money is buying when it's low. We still have that opportunity. Now, if your time horizon is 5 years, buy at any point. You're going to be up, okay? But the majority of people that are entering the space, especially if they're entering here, they're buying here because they're seeing this is when the hype cycle starts. Hype cycle is essentially when the price breaks previous all-time high and the news, the free press for Bitcoin and for digital assets just goes through the roof. And so it's on every cable television show. It's on every news thing. You're hearing people talk about it down the street, walking down the street. You get in the Uber, people talk about it. In BitLab Academy, I call it the Uncle Larry, Aunt Linda indicator, when those people that have been trash talking Bitcoin for, the last 2 years are like, yeah, I'm thinking about getting out. I'm going to get some Doge. I'm going to get some Shiba Inu. Doge is a little bit past this narrative now. It really is effectively part of the crypto space. But I don't think of it as an investment because it's going to pump and then people are going to sell it off. I want to buy things that are going to pump, but in some sort of, I don't want to say predictable way, but as close to predictable as possible so that I can identify certain data trends, certain fundamentals, certain metrics that can give me a good indication of when to stack the probabilities to buy or sell. And when the market is dropped like this, and I've shown you a number of different metrics, and we can go over some of them today as well, there's clear metrics that identify when is a good time to really start looking heavily about where you're going to pick your entries if you're looking for taking advantage of the majority of the next bull run. And this is something that I mapped out. I drew this all the way. This was right at the beginning of the year. I think I mapped this out around January 10th or something, shared it on January 29th. And we can see this is exactly what has currently happened. We had that push up, we had the pullback, and we're basically right here right now. This is essentially where we're at. So the timeline on this wasn't supposed to be exact, but this is essentially where we're at. And this would be about June, July. Potential push up to the golden pocket, which is same thing we saw back here. This was a golden pocket from the previous high at 17,000 or 17 to 19,000. Down here, 3,500 up to about 13.8. Pre-halving pump, pullback. Here's the halving, and then after the halving, the bulls will let loose. So where we're at right now, we pushed up to about $30,000, pulled back. Down to around 25,000, push back up. We're in this zone right here. This is a perma bear short zone. Everybody, I was on the space last night with Gareth Soloway, and the space, the title of the space, the theme of the space was essentially bull market or bear trap. There's still a lot of people that believe this is a bear trap. Now, I will give some credence to a lot of the points they made are very cogent points, very smart to consider. We can't just look at Bitcoin in a vacuum and say, well, this is what it did last time, so it is sure to go up. It's sure to have this pre-halving pump, maybe, you know, whatever sell off and then a continuation after the halving. But we still have to pay attention to global markets. We still have to pay attention to the lack of liquidity in the space. However, the confusion that's thrown on all this fire is BlackRock foraying into the space. So the question is going to be, is that going to fuel a true bullish impulse? Or is it going to soften a bearish impulse if it comes? We can't know that right now. All we can do is plan one moment at a time, every day, look at our levels, stack our probabilities, and figure out what's going on. So with that being said, I love each and every one of you. Thank you all for being here. We got 205 people in the room. Everybody in the room right now, if you are involved with crypto, if you like crypto, if you're even interested, hit that like button, hit that subscribe button, ding that bell, and we're going to be diving into all of this and more. We're going to be doing a lot of charts and TA today, but I want to look, I want to tie in some of the macro and some of the fundamentals that I'm looking at so we can really figure out what's going on here. So we got some things we're going to cover here. And before we dive into more crypto stuff, what I'd like to do is I'll like each and every single one of you, make sure you're coming over here to BitLab Academy's Twitter page, which is at Academy BitLab. Hit that follow button. Hit that retweet button, hit that like button, help support this channel, help get more people funneled in here so that they can learn about what's going on in these markets and be a part of the community. And if you're watching anywhere else and not here on BitLab Academy, you go to youtube.com/@BitLab Academy and you can follow us here. By the way, nobody follows. Every one of you, when you join this community, you are part of the community. None of you are followers. We are leaders because we are a millennium ahead of the majority of the world in these, basically participating in this digital asset ecosystem. We're pushing up just shy of 8,000 followers, community members. So get involved. Now let's go ahead and look at some of this broader context. We're going to be going back and forth. We're going to be looking at a lot of stuff today. Caleb Franzen says, yes, NASDAQ 100 futures are down more than, basically down 1%. Yes, the NASDAQ 100 has been moving higher for 8 months. You see, this is what we're looking at right here. NASDAQ 100. We're using this as just a bit of a metric to gauge some potential pressures in the risk narrative for if liquidity is going to be flowing into Bitcoin and digital assets or not. And one of the things I want to point out here is that we have rejected at this level. And if we look, just remember, look left. We want to get more data. We want to see if there's more confluence or weaker confluence. Look left. Looks like we have a pretty clear level here that if we don't break this, this very well could be a bear rally and basically start moving down. If this moves down, what does that mean for Bitcoin? What does that mean for these digital assets that we want to make us rich? Well, in order to be rich, you've got to navigate the market. And in order to navigate the market, you've got to look at a number of different things that affect the one thing that you're focused on. If you're focused on Bitcoin, you don't only look at Bitcoin, you look at the other factors out there, the context, the environment of the space that can give you an edge to make sure you're making smart decisions. And similarly, if you're only holding Cardano, if you're only holding Arbitrum, then you absolutely need to scale out of that asset and look at Bitcoin and Ethereum. Keep your finger on the pulse of the market so the market doesn't keep its foot on your neck, okay? That's what we're trying to do here. Let me just go ahead and look at chat real quick. By the way, I'm standing today instead of sitting, and my back is already feeling so much better. We got so many people in the room right now. Oh, loving it. We got 207 people. Let me move this over. 111 likes. Let's get that going. Maybe we'll do something special if we get over 250 likes today. So let's look at this. So NASDAQ 100 coming up to key level of resistance. And what do we see? Look at these. Look at these double tops. Double top, double top. Right here, double top, down, double top, down. Got a head and shoulders right here. How do I know that? I can see this left shoulder, head, right shoulder, down. We got a little bit of a head and shoulders right here, down. We got just choppiness here, down. Triple top, 1, 2, 3, down. A little bit of an M formation, down and then up. So are we starting to see a little bit change of change of trend, change of narrative? Well, currently we have a double top right here. This has a lower high. The question is going to be on this pullback, is this going to make a bull flag right here and break out to the upside? Or is this going to come down, test this low, maybe come down here, bounce up and come down? If we break this low on NASDAQ 100, then my bet is going to be that there's going to be some down pressure on the markets, which may not entirely crash Bitcoin, but is definitely going to make it a lot harder to see what we want to see, which is, you know, this right here, this push up at some level between $36,000 and $45,000. Golden pockets all the way up here at $48,000. I think that's going to be, unless we get some massive news or the Bitcoin ETFs start getting approved, or, you know, Coinbase cases is dismissed or something to that effect. I don't think I'm not betting on actually getting to the golden pocket. I'm just measuring this out. There's a possibility. I'm thinking that if we do get this push up and we don't have the NASDAQ 100 and we don't have the traditional assets starting to pull back, sorry, I was just seeing a message from Brad G. Yeah, Alex, take a look at that from Brad G. I'm thinking that a more likely level is going to be right in this zone right here, this $36,000 to $42,000 range. That would be essentially, if we actually come back over here to BitGet, we can see we've got some things on the chart, don't we? So what would that be? That would be essentially this block that I have here. And I think if we do get here, I think it's actually going to come up here and a wick up, sell off down, and however low we break down after that, we'll have to see. But we got to keep our eyes on the prize. We got to look at the things that are giving us indication about where things might go, because this currently is looking like a setup for a pullback. The question is going to be, how far will this pull back? This will give us signal into what's going to be happening in the next, 1 to 3 months, most specifically. If we break down and we can't hold this line, then I think there's going to be a lot of downward pressure on the markets. If we bounce, much higher than this level and form a little bit of a consolidation pattern and then break out, then this is saying, okay, risk is on. Maybe we don't get a rate hike July 25th and 26th at the next FOMC meeting. Right now, the bet is it's pretty high. If we come over here, we look at the CME FedWatch tool, I think it's over 80% still. Yes, 94%. And this went up. Yesterday it was 85 or 86%. This went up because we saw those FOMC meeting minutes yesterday from the last FOMC meeting. What is the FOMC meeting? Foreign Open Market Committee. It's basically, they're the ones that are determining what, not foreign, federal. I don't know why I said foreign. They're the ones that are determining what, it might even be commission. FOMC stands, okay. FOMC stands for, maybe Federal Open Market. Yeah, Federal Open Market Committee. They're basically the grouping of the different Fed chairs of different states, and they essentially come to an agreement of, almost like a democratic sort of decision, and then Chair Powell makes the ultimate decision about what the federal fund rate is going to be. Now, why have we been talking about this so much? Who cares about the interest rate? Well, the interest rate is determining what the percentage rate of interest before institutions can even charge their interest on top of that. So, for instance, if you have federal rate of 5%, you all might have seen this if you have any credit card bills, or if you try to apply for a home loan. Those have become more expensive because the institutions themselves, before they lend those out, have to pay essentially this rate in addition to that. So this basically pulls money. It stifles the amount of money that is regularly available. It also has a big impact on loans for businesses and companies. This is how they finance stuff. Companies don't tend to pay cash for the things that they're trying to fund. The wealthy, the prosperous, they use debt. And when debt gets expensive, that means there's less liquidity to grease the wheels of whatever the things that they're doing. So it means that there's less money in the market. And why do they want less money in the market? Because they had a problem with inflation. Inflation's high. Okay, that means people have too much money. It's basically driving up the cost of goods. So let's go ahead and remove the amount of money that's available slowly. Obviously, this has been a slow thing for the last year and a half, but we're starting to see the effects of that. And everybody's saying, well, You know, there's a lagging effect on the FOMC rates and how it affects the liquidity in markets. And so we're already starting to see a large pullback in inflation and CPI and PCE and all these different metrics that they're utilizing. However, they don't want to, they're on this, between this rock and the hard place, because on the one hand, right now, the debt is far too expensive to service. I mean, the amount of money that we're paying right now, just in interest rates as a country for the, you know, $33 trillion in debt that we have is astronomical. So we got to pay attention to all this, because although the market has been pushing, how much has the market been pushing? I'm talking about traditional markets here. Traditional markets, the biggest movers in these markets has been, I forget what they called it yesterday on the stream, the Fantastic Seven. They used to call it the FANG stocks. And by the way, funny little side joke here, or side tangential thought. The FANG stocks, which is supposed to be Facebook, Apple, Netflix, and Google, technically now should be called Gamma, because now it's Google, Amazon, Google, Amazon, Meta, because Facebook is no longer, right? It's now called Meta. What was it? Microsoft, and what was the other A? I don't remember. But we have a very disproportionately small number of massive tech stocks that are basically buoying the entire traditional marketplace. So what happens if those slow down? I saw a metric yesterday with AI alone. Of course, there's going to be an initial impulse there as everybody becomes aware of AI. But the use and downloads of things like ChatGPT and even Microsoft Bing is down 38%. So if AI was a narrative that was really driving a lot of the growth in a lot of the traditional asset space, and we're seeing that slow down, what happens when markets go up very fast? They tend to have some sort of sharp pullback. And Cameron Foos and Gareth Soloway yesterday, and a few others were all suggesting that, you know, having a pullback doesn't mean that we're actually going to have, retreat back into a bear market. But in the impulses that we're seeing right now, I think we've had the strongest traditional asset NASDAQ performance in the last 40 years, the first half of the year. And when we have strong performances like this, performance like it's a talent. When we have strong price action movement to the upside like this, there tends to be, roughly about a 12% pullback. So I just want to caution before we get into the super hopium bullish things that we are talking about. It'd be irresponsible of me not to highlight the fact that there's a lot of work to be done in order for price action to go to where we want it to go. The market doesn't do what we want. The market does, kind of what the institutions want and what the Fed wants. You don't fight the Fed. We still have some work to do. We have to make sure there's some sustainability. We have to see some certain levels being broken by the traditional asset space. And so let's go ahead and dive back all in here. So we looked at that. We looked at all these different asset managers that, the dominoes are going to fall quick. Once the institutional spot Bitcoin, once the spot Bitcoin ETFs start to open up the door for traditional asset managers to get involved, we're going to see a domino effect of a lot of different large institutions, most of these top 25 for sure, really getting involved, either having spot ETFs or investing very heavily in them. Okay. And once that starts happening, in order to do it, a lot of these different institutions are going to start preparing on their own by identifying prices. And the question is here, and this is from Tim's TA, one of our in-house guys here at Hit Network. We also work together at Crypto Jeb. He made a great point about a year and a half ago, back when we were at Crypto Jeb. He goes, when retail, when you miss the boat, you miss the boat. When institutions miss the boat, they bring the frickin' boat back. Picture this. You have a yacht. Let's be modest. You have a large, you have a medium-sized boat. You got 100 people on there. You're going to go on like a dinner party. And you could even go larger than that. You could be a plane. If Elon Musk books a flight on a plane, they're going to wait on him to get on that plane. That plane could be taxiing out to the wrong way. They're going to turn that plane around to make sure Elon Musk is on that plane. Okay. Part of that has to do with just his social value, net worth, and his impact on his disposition around how things happen. But similarly with institutions, if they miss the boat, they have the tools, they have the mechanisms, and they have the liquidity to trigger those emotional reactions in you, retail, and me, retail, to create those liquidation events to flush out down and get that spring before we jump back up. What the hell am I talking about the spring? Well, a great example of that is right here. Perfect sort of Wyckoff, perfect sort of Wyckoff accumulation zone here. We can see, where are we at? Going right here. So we see this, a lot of volatility up and down. Screen's up now. We got a lot of volatility up and down, and we get this final washout to the downside, boom, and then we launch to the upside, okay? So similarly, when we look where we're at right here, this is very similar. A lot of volatility, and then final, boom, washout. Institutions brought it back, boom, launch. We can see it again right here. A lot of volatility, final washout, boom. So this is why I'm not telling you, any one of you, I'm not telling you what to do, why to do it. I'm telling you strategies that you need to utilize and tools that you can use to make sure that you don't fall victim to buying here because you're so excited we finally broke this high, only to get rejected, not recognizing we have a resistance trend line right here at this level. And in addition to that, you bought the hype rather than buying the fear, only to then sell here because now you're worried it's going to go back down, not recognizing that what is really happening, if you bought here, you have other opportunities to lower your average entry. So that's what we want to do. Morel Crawford, what's up? How you doing? Shout out to him. He does all the hit merch. Got Frankie Candle's hat right here. I don't have any of the shirts in the room, otherwise I'd have one on. But if you haven't checked out Hit Merch, definitely check that out. I'm going to pull it up right here, hitmerch.com. Check out this website. We got all, if you want to search for any of the products, you can just type in BitLab. If you want to see any of the BitLab merch, we got different long sleeve shirts. We have this in white and orange. And I think we also have gray. And of course this mug, but we got all kind of different stuff here for Ben Token, BitBoy Crypto, Frankie Candles, around the blockchain. So check that out. Morel does a lot of hard work on all that. Now coming back over here to the charts, let's actually back it up a little bit and go through some of the other things before we do a bunch of TA. Everybody, if you like what you're seeing, hit the like button one time. If you hate what you're seeing, hit the like button 3 times or hit the dislike button 3 times. It doesn't matter to me. I'm just happy that you're here and we're sparking some conversation. And if I'm stirring something inside you, whether it's good or bad, that's what this is about. We need to look at these markets, figure out what the hell's going on so that we don't miss the boat from institutions. Take advantage. If they pull the boat back, don't let that make you scared. If they pull the boat back, say, man, I'm jumping on the side of that boat, baby. I'm going to ride. I'm going to ride with the whales. I'm not jumping in the water and swimming with the fish anymore. So take advantage. When you have people like Larry Fink speak so positively about, where is it at? Where's the story? This right here. Formerly skeptical BlackRock CEO. Remember, he was fudding BlackRock as an index for money laundering a few years ago. Now, largest asset manager in the world has the ETF application in, and he's touting it as digital gold. And here's a couple points, and then we'll go on to the next story. He described Bitcoin as digital gold, which is I like the wording there, but it's not technically correct. But he's giving it his stamp of approval, and emphasized its potential as an international asset. It's not beholden to any government. It's not controlled by any by any individual institution or global sovereignty. He also expressed his belief that Bitcoin has the power to revolutionize finance. Well, I'm here to tell you, Larry, it already has, it already is. And that's why the government's so threatened. That's why they're being so slow to let this move forward, because if people find out on broad scale how amazing this technology is and the utility and the independence. Yes, 2 days ago was Independence Day in the US. The day you buy Bitcoin, you have proclaimed your innocence from global markets. Do you still need to participate in them? Oh, hell yeah, you do. But with Bitcoin and with digital assets, now you have a tool to hedge yourself against the world and all the dum-dums out there. That's right. So we're going to clip that because that is absolutely the truth. Fink has also, Larry Fink, CEO of BlackRock, has also spoken about BlackRock's aim to make cryptocurrency transactions more accessible and affordable for investors. So now we have the largest financial institution in the world going to be building product services and ease of use, direct access. It's an IV straight into the vein of the world economy right there, everybody. He stated, what we're trying to do with crypto is make it more democratized, which is kind of funny coming from BlackRock, with all of crypto and much cheaper for investors. Well, I'll tell you right now, one thing that's not going to be cheaper is Bitcoin. Bitcoin's going to have volatility between now and when it hits 500,000, between now and when it hits $1 million. And when it starts breaking above $100,000, which is inevitable to happen at some point, whether it's in the next bull market or maybe there's a lot of shenanigans around FUD from the SEC and the US government or other world governments or something, then it doesn't have to happen next bull cycle. But patience. Look at Warren Buffett. He started not as a wealthy man, and he's one of the richest men in the world. How did he do that? Patience. When you look at the fundamentals of Bitcoin, it screams, this is something that you'd be silly if you didn't have some exposure to. And when you do get exposure to it, you hold that exposure. Now, this endorsement from BlackRock marks a significant shift from his earlier skepticism towards cryptocurrencies. Earlier, Fink had expressed mixed views about Bitcoin and other crypto assets. Yeah, that's to say the least. And this is the next deal right here. Basically, BlackRock's ETF filing has spurred other firms to file or refile for spot products, blah, blah, blah. This includes firms like Fidelity, Invesco, signaling, this is a key term right here, signaling broader shift in the financial industry's attitude towards Bitcoin and crypto. BlackRock's spot ETF, I know we've been talking about it for about a week now, but his talking points yesterday on air, on his little PR run, is signaling, and we're starting to see a broader change in the entire financial ecosystem around, this is the traditional people, not all of us that are in the space. We're trading and investing on the speculation, hoping, forecasting, positive movement and price action coming from some of this narrative change. But the fuel for that change is going to be this institutional money coming in. I spoke yesterday about the amount of money needed in the space to even for us to 2x. For us to 2x from here, we need about $600 billion of new money to come in the space to drive that up. Well, we've had a lot of uncertainty and sentiment around, crypto markets, especially in the last year and a half, with the cascading failures from Terra Luna to Celsius to Voyager to BlockFi. I mean, the list goes on and on. The FTX finally put in the final fire against everybody's feet. But we had a higher low still on the macro, right? 15,000 is a lot higher than 3,500, right? We've broken out of a massive downtrend. This right here. Let's go to the 12-hour. Broke out of this massive downtrend right here. Tested it, broke up. We have these higher highs, higher lows. We're fighting right here. And I talked about this yesterday on the spaces I was on. It makes sense. Makes sense that we're fighting right here. Why? We've only tapped it once. Right here. Go ahead and we're going to do a line, option H. This is where we're fighting. Let's see how much effort it took to break it. Well, 1, 2, 3, 4, 5, 6, 7, 8. This whole period, we held at this level. We held at this level for 38 days. See right here, 38 days. And then we finally lost this level. And so is this disconcerting? Is this frustrating that price is holding at a level that we know to be an absolutely important level based on previous price action? No, this is a narrative shift. What is it? Look at this. V-shape, bop, bop, down. Push up. One candle on this. Let's go on the daily. One candle wick got up there before. And look at this. 1, 2, 3. 4, 5, 6, 7 candles now. And this is over a matter of, it's more than that, because if we look at this over a matter of days, it's 15 days we've hung out at this level. So is it the worst thing in the world if, does this mean that this rally is over if we get a little bit of pullback? No. Remember what I said about 15 minutes ago. When institutions miss the boat, they pull it back. Well, BlackRock just signaled to the entire world, Bitcoin's A-okay. You need to get on or get out of our way. That's essentially what BlackRock said. And everybody in the world, for instance, if I'm a race car driver, I'm the best race car driver in the world, and you are a race car driver as well, and we're pretty even. And there's nobody even with BlackRock, but for the sake of this metaphor, we're pretty even, okay? Or you're just trying not to be lapped by me anymore. And you go, you know, I change the standards for what I'm doing with my tires or for my fuel injection in the car. And all of a sudden, say like we've been pretty even. We've been, pretty equilibrium between, pretty close, right? And then all of a sudden I'm like 22 seconds faster each lap. You're going to go over there and go, what the hell did you do different to the car? Oh, he's got different tires. You know what you're going to do? You're going to go and get those tires. That's how marketing works. Why do you think they show so many damn Whopper commercials on TV and McDonald's commercials and Coca-Cola commercials? Because the regularity of seeing it, and somehow they're associating this with a different aspect of your life. Same thing with what's happening now. There's been a complete, let's not even call it FUD. There's been complete ignorance globally. Other than the very small percentage of us that are involved in the digital asset ecosystem, there's been ignorance with your mother. Yeah, I'm talking about your mother. With your father. Yeah, I'm talking about your father, your brothers, your sisters, even you before you got involved. Now, if that's the case, think about these institutions that also are charged with protecting the assets that they're managing. There's going to be heightened skepticism there. But now we have the world's largest asset manager, and they say, this is our recipe for our next secret sauce, and it's no longer secret. Bitcoin is something that everybody should have exposure to. Everybody's going to be, we're going to see a lot of different asset managers and financial institutions start to scale in to these positions. So this pullback here, the only time I'm going to be worried about this, looking at this chart, the only time I'm going to be worried about this is not if we get this red line that we have here, which I also shared on Twitter. Just somebody asked, is that real technical analysis? No, this is basically 4 squiggly lines of 4 possible directions that this could go. And I'm just asking, which way do you think this is going to go? We got the fake out to the upside. Now we're going to come to the downside. Are we going to get basically this double washout of liquidity? People that are going, the perma bears saying this is a trap. They short from here. This also liquidates these longs that were in this zone. If we actually come over here to coinglass.com, we can come over here. We can go to liquidations. Let's go 24 hours. Now I want to look right here. So there wasn't a lot. Let's go to 4 hours. So this push up here, we got some liquidations and longs, then it comes down, it starts moving back up, liquidates the shorts. Right here, we get people keep diving in with leverage, saying this is the bottom, it's about to break out. Well, you need to be patient, because especially as more institutions get involved, they're looking at some deep data metrics, they're looking at book maps, they're looking at order flows, they're looking at all the things that most people don't even aware are there, where they're seeing where all the different liquidation levels are. They can see this stuff. Shout out to, where's my mouse? Shout out to Jumper DCS World, says stocks are almost at an all-time high. Bitcoin's next. Well, while I'd love to agree with that sentiment, I think there's a lot of work that we have to do before we have to contend with the level right above us, about 31.4, 31.5, break that, and they get up to 36,000, hold and break that. Shout out and thank you, Jumper DCS World, for the super chat. I very much appreciate it. Appreciate anybody that goes out of your way to support the channel. Thank you very much. I see you in here too, Crypto JMP. How you doing? I just want to make sure there's no other super chats. We got all these levels above us. 33, which is right about 34. We have this 35,000 level. We've got this level up here, this 38,000 mark. And then, of course, the golden pocket, which is right up here at 49,000 to 50,000. It's going to be a lot of work. If somebody really is thinking we're going to hit all-time high this year, is it possible? Yeah. But I want to see, I'm not even going to consider breaking, I'm not going to consider even touching previous all-time high, whether you call it 64,000 or 67,000, 68,000, until we actually even get anywhere near the golden pocket. And we also see that NASDAQ is pushing, the traditional markets are pushing all-time high zones. Patsy, what's up? Get yourself a new set of strings for that fancy guitar. Hey, man, I'll be restringing that thing once a week, man. I was brought it into the office today. Was playing it this morning with some of the staff here. It sounds like man, it's so darn good. Shout out to everybody in the room. Thank you very much for Jumper, DCS World, and Matt C for the super chats. I appreciate it. We got a little bit more we want to talk about. Where was it? This is, we also have this. Can we hear it? This is Milton Friedman. I don't want to go. This is two minutes. Nobel Prize winning economist Milton Friedman predicts Bitcoin nearly 30 years ago. And we can watch the very beginning of this.
But I think a much more,
because he talks about taxation, which is interesting.
Source of optimism is the growth of the internet. In your area, the major effect of the internet will be to make it harder for government to collect taxes. Governments can collect taxes best on things that don't move. Land is an ideal basis of taxation because you can't take it away. Yep. Individual states cannot go as far in taxing personal income as the federal government can, because people can move from one state to another.
So long story short there, what was interesting I found about that little clip is the idea of digital property, which is what Bitcoin is. That's why it's still considered a commodity. But you could sell your house and put the money into Bitcoin, put that Bitcoin in a cold storage device in your pocket, walk across the border to another country or to another state. And you could take your property with you without having to transact it between financial institutions, without having a big piece of land that says, this is where you tax me at. Now, on the one hand, there's positives and negatives to this context, because this actually screams to why there's a lot of frustration with governments as to, I would argue that they do want to support it, but the fear is, how do we control it? How do we tax it, right? Because at the end of the day, governments are like corporations, right? In the U.S.'s case, the U.S. technically it's an incorporated territory, right? And so corporations are their own entity in into themselves. It's like an organism. Corporations do what's best for the corporation, not for the individual. And if government is a corporation, but there's some cognitive dissonance there because we're expecting that they're doing what's best for the individual. No, they're doing what's best to keep themselves in power, to keep themselves in control. So Bitcoin makes them terrified because they don't know how to control it. They're trying to utilize regulatory framework from the 1930s for the Howey test that doesn't account for about 70% of the different dynamics that are involved within the digital asset ecosystem. So in reality, what needs to happen is we need time travel, jokingly, because the speed in which technology advances and the speed at which government actually makes positive momentum and, even brings a law, basically brings a bill to go through the House, go through the Senate, and then to get signed into law or new regulations. It's a monumental task to get anything like that done. And meanwhile, we're seeing technology advance at, an exponential rate. Is it Metcalfe's law? I can never remember if it Metcalfe. Is it Metcalfe's law or Moore's law? That's the value. Can't spell Moore's law. I believe it's right here. Here it is. So blah, 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 number of transistors in an integrated circuit doubles about every 2 years. Moore's law is an observation and projection of a historical trend rather than a law of physics. It is empirical relationship linked to gains from experience in production. Now we have things like AI, which even like shoots that to the moon. So we're having these new functions, new utilities, new use cases, and we have a government that does not operate any faster. So even if they were to come in with regulation now, today, the truth of the matter is we need to have a broader framework that accounts for growth and change rather than some box that they're trying to fit, they're trying to fit water in a box without the framework of the box and saying, well, that water can't fit in a box. Well, put it in the box. Well, there's no way to even argue about any of this. Swashbuckling scallywag says Frankie's calves law. Yeah, that's absolutely true. But let's go ahead. I want to get through this last bit of stuff, and we're going to jump into a bunch of TA here. This is something I want to, this is tying back what I was talking about earlier. I do think that although we are looking to Bitcoin, this sort of diminishing returns, I do think after all that I just said, that leads up to right now, which is now we have a gateway and a potential path forward to an amount of liquidity that we cannot even fathom. The market cap of gold, I don't even know what it is right now. Market cap of gold is, I think it's around 11 or 12 trillion. Market cap of gold today, let's look. 12 trillion, so 12.6 trillion. And think about this. Now, again, we're not going to get all BlackRock's assets under management into Bitcoin, but BlackRock alone is 9 trillion, okay? We have tens of thousands of different institutions out there that are going to start looking to, it's going to cascade relatively quickly in the next 5 years, okay? And I do think that there's going to be, here he calls stock money lizards calls his super cycle. I actually think that this is somewhat truncated and that the price action could have gotten closer to the top of this band. And I do think that we are actually going at whether it's this next bull cycle or the one following it, one of these next two is going to eclipse the amount of gains that we had in the previous cycle. And that's because once the doors open in a meaningful way, coupled with positive regulation, and maybe not even positive, but understood regulation that even if every altcoin is regulated as a security, in reality, if you imagine, if that were to happen, that would be incredibly powerful for Bitcoin. If Bitcoin was left as a commodity and the rest of the digital asset ecosystem in the US was shut down, that means all the money in the digital asset ecosystem is going to be funneled specifically towards Bitcoin, or the majority of it. People are still going to use VPNs and trade on exchanges out of the country, but the majority of money, especially from institutions, is going to be flowing into Bitcoin. And once those floodgates start opening and BlackRock actually starts to meaningfully allocate a lot of funds towards that, the spot ETF opens. We see Morgan Stanley, Dean Witter, Goldman Sachs, Bank of America. Once we see this flow into the digital asset ecosystem, and we actually start seeing other spot ETFs and different assets as well in the digital asset ecosystem, I do think we are going to have at least one run that's going to break in the next 2 cycles. So in the next 6 years, 6 to 8 years, one cycle is going to have a bull market impulse, a bull market parabola that's going to eclipse the previous one. And then after that, I think it's going to be diminishing returns for the rest of the life of Bitcoin. But this is exciting. This is now time. If you're excited, throw a 1 in chat right now, because this is what we want to see. We want to see all these things that we've been working towards and hoping for. We see Bitcoin talked about on the floor of the Congress and the Senate, and every financial talk show. I mean, even a mention of Bitcoin 5 years ago would send it up 30%. Now it's talked about all day long, every day, and it's slowly getting into the brains of people. It's slowly coming to fruition that this is the best asset in the world, and this is the path towards independence. So, we got a couple more things. This is what I want to watch out right here. This goes back to the idea of volatility. Bitcoin's volatility. This ties back to what I was talking about with the law of diminishing returns. Bitcoin and S&P 500 30-day implied volatilities. We are seeing that volatility has fallen in recent years. This goes back to 2021. Say we're getting these spikes in volatility. Okay, now look, this is falling. We are going to get a large, what happens in markets. We get cyclical and price going up and coming back down. We get cyclical and volatility being very far expanded right here and then coming back to equilibrium. And we get far expansion and come back to equilibrium. A little expansion, equilibrium. There's something brewing in the next, I would say, about 16 months. We are going to be seeing some absolute fireworks. So be patient, get in position. 235 people in the room, 156 likes. Hit that like button, hit that subscribe button, ding that bell. Let's do some TA. We got to do it. We got to get involved here. If you haven't yet, go check out bitlabacademy.com. Check it out if you want to know more. If you want your friends and family to know more, send them over to right here. Come here to free access. And you can see we got this is all free access. All they have to do is put in their email and they get free access to Blockchain 101, Bitcoin 101, Crypto Beginners. If you want to get involved with all of the stuff, all you got to do is come over here. And when you go to BitLab Academy, click Enroll Now, which you'll see in the top right here. And you can select if you want to do the BitLab Pro, which is all of our indicators and all our courses and premium Discord under $100 a month for the best education in crypto. Or you can go down and scroll down that page and go to All Access, and you get access to all of the courses, no indicators. You get all access to all the courses and the premium Discord for about, I think it's under 40. It's like 37 bucks. But you can use Give Me 30 for 30% off your first month if you want to utilize that. I just wanted to shout that out. Again, if you haven't yet, come over here to the BitLab Academy Twitter page at Academy BitLab. Hit the retweet, hit the like button. Make sure you're also following me right here at Kelly Kellam. Come get involved. Now let's go do some TA. Now, first off, this is what I was drawing. I drew this yesterday. What was going to happen? I drew this about right here. We're seeing a little bit of a double fake out. It's going to be interesting to see what direction this goes. So let's go ahead and delete these different ideas. $10, Eric Serrano, LOL with the butt, looks like a butt twerk there with hearts on it. Hey, what is that? No, is it 2 hearts and a strawberry? I don't know. Thank you very much for the super chat. I appreciate you. Now, okay, what's going to happen here? Let's go ahead. I'm going to give you guys a little, it's not done yet, but some of the upgrades that are coming to the BitLab trading stack. Let's go ahead and look at some of those things right here. Okay, we are riding on top of the, I think there were some updates. Let me go ahead and, we've been working hard on this stuff. So BitLab Intelligence and BitLab Volume. Alrighty. So point of control right here. See this? This is a point of control. We're sitting right now just below this high volume node here. If we zoom in on this, we're on the daily. Yeah. So this is, I don't want to say a little concerning, but we are seeing a little bit of an M formation here. And we are now pushing this pushed into this EMA ribbon that you can see here. And this is coming down to kind of touch this sort of dynamic sort of support zone here. And what I'd really like to see is the price action hold somewhere, if this dips down, somewhere within this zone. If this dips all the way down and we wick down below it, this is going to be a little concerning, especially with where we're at, because there's so much positive momentum right now and enthusiasm in the space. If we lose that with this just coming back, I do want to again caution you that the institutions right now are going to do everything they can to pull it back. So don't be somebody that sells in fear. If you see everybody else selling in fear, then that's an opportunity to lower your average entry. Remember that. Now, this is coming down to this previous level right here. It's bouncing right off this. Now, if we kind of come over here to, is this on? Yeah. We're going to look at the current BitLab trading stack. Yeah, we had 3 bearish divergences. This is coming down. This is neutral here. This is looking a little undecided. I'd like to see what goes on here. I'd like to see this actually find support here and be a double fake out, meaning we pushed up, broke, you know, kind of pushed up this way, faked out, come down this way, fake out, come up like this. That's what I'd like to see. Will it happen? I don't know. So let's go ahead and look at traditional indicators. Okay, stochastics coming down, money flow coming down. This is on the daily. The MACD is, it's clipped right here, meaning it's, see how it's been contracting? Now it's flipped red. Let's come down to the 4 hours, see what's going on. Money flow, look at this. This money flow, this is concerning because we're seeing this right here. I don't want to see this go continuation to the downside there on money flow, because that means people are pulling money out of the market. And if you don't have fuel, you can't go up a hill, right? So what I'd like to see here is price action, the most bullish case, hold in the zone and bounce up from here. If we do drop from here, let's do a, yeah, so this right here also has a 382. If we drop down to this zone, look, we have this previous high right here and the golden pocket from this move. So if we pull back and we hold above this zone, 28.5, 28.4, 28.5, this, I'm still, I mean, very bullish. If we come all the way down to here, I would be honest, I'd still be bullish, but I'd start to have some doubts because this means it's coming into this rising wedge. And if we come here and we lose this, then I really, really, really want this to hold above for bullishness in the next 6 weeks or longer, 3 months, I'd really say. I really want it to hold above 24.7, 24.8, because this is a previous low. If we come down here and break this low, then this likely, if this comes down like this and breaks this low and bounces in this region, comes up, finds resistance, comes down, this would be, we're going to have to look at that if it were to happen, but it is something that could happen, especially seeing the money flow coming out like this. And look at this massive bearish divergence right here with this high and this low. Oh, sorry, these two highs, lower high here on the money flow. And look at where this is right here. This is the peak of that money flow right here. Look how low that is. And then look how high that is. This is massive bearish divergence. So there is some concern. So just pay attention to that. If this does bounce from here, then the next target I'm looking at, where you all know, come right here, do your flag. We'll do a little conservative flag. We'll do it from the bottom of this rather than the top. Look at this. This goes right up here to $35,000, $36,000 mark. So that's what I'm seeing on Bitcoin. Coming to ETH. Coming to ETH. Let's go ahead, go to the BitLab Trading Stack. Alrighty. So, okay, we got our VWAPs. This is on the new BitLab Intelligence. We have you can set daily, weekly, and monthly VWAPs if you want to see them on the chart. Come down here. I can turn these on and off. Let's keep our weekly on, which is yellow. So price is trading below the VWAP, volume weighted average price. That's what VWAP is. It's very strong signal for people that understand what it does because it gives an indication of what institutional money trades a lot of swings. Basically, when you have a huge divergence, basically, I mean, the price is very far from the VWAP below it. Price tends to be attracted back to the VWAP, and then we'll overshoot it. And then basically, it's awesome. The price tends to oscillate around the VWAP. We can see this yellow line here. You see is down here, comes up, gets rejected, gets all the way back here. So we're having this oscillation around the VWAP. And right here, we lost it. And now we came up here, tapped it, actually overshot it, came back down. Now on this 4 hour, we've fallen all the way through this dynamic cloud here. So what I think is likely here based on this is Ethereum on the 4 hour. This looks a little bit like a head and shoulders here. So option T, go across here. Now option T, go up to the top. Now come here and project this down. Now we're losing this level here. Okay, we have a sort of triple top here, breakdown. On the more larger time frame, we have a double top here like this. But even within this, we have head and shoulders. So we're having multiple bearish signals over the course of the last week. Okay, last 2 weeks. Bearish reversal pattern. This is a bearish reversal pattern. This is a bearish reversal pattern. This is a bearish reversal pattern. So we have 3 bearish reversal patterns in the past week, and we're losing this key level right here. So what I want to see bullishly, I want to hold above this line, which is basically 1827. If we do come down, then I want to hold at this level, which is 17. If we came straight down, it'd be about 1770. If we trickle down, it could go down as low as probably about 1740. Now this level is important because if you look, see my crosshairs on my chart, this area right here, this whole area, if we kind of go like this in the kind of equilibrium of this area, let's pull this left. Well, look at that. This area right here where I was just calling out is also the tops of this previous inverse head and shoulder right here. And this wick down as well as all this price here. So if the price does come down, sorry, my bad. If the price does break down and lose this level, I'm watching bullishly for this to hold above this level. If it doesn't hold above this level, there's other things at play, and we got to pay attention to that. All right, let's go ahead and, there we go. I'm just cleaning that up. Let's do Turbo TA on some alts, baby. What do we want to do? Let's look at the Dixie real quick just to get a view on what's going on. Let's go ahead and meet that guy. So option T. Actually, you know what? I have it right here. My bad. Okay. Look at this. We got this. This is what I'm looking at. You can ignore these two lines right here. I'm actually going to make them a little less visible so they're not overpowering what we're looking at. What I'm looking at right here is this, excuse me, descending triangle. Why is this so light? There we go. So we have this descending triangle, descending level of resistance, flat level of support. These typically break bearish, which would make sense because if we get some sort of reversal of the Fed policy or a meaningful pause that's endured over several months, then, you know, I do think this is going to break down. And my next target below this is 95. This would be risk on for markets if we see this. Now, coming back over to look at the rest of the markets, let's look at Cardano. Cardano falling wedge. We talked about this yesterday. Okay, we've got, look at this. We have 5 bearish divergences. What are they? RSI, money flow, MACD, stochastics, and on balance volume. Now we come right here. We got 3 bullish divergences, RSI, money flow, and stochastics. Currently, we have a bit of a trend line right here. We see this bounce, 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 bounce. If we get able to hold this, then we very well could continue. We could honestly just continue chopping all the way across over to here. If we lose this level, then the next sort of level down I'll be looking at is actually probably testing all the way down here at 24.8. If we look at, let's look at Atom. I don't think we looked at Atom lately. I drew this a while back, but we see the stair step. Boom, boom, boom. Is this going to come down? This is getting rejected here. It's testing this level. If we're not able to hold this level, then I am looking at coming back down here to the 778, 780. If we lose that level, which is more likely because this is just a previous low, then yeah, I don't even, it'd be lower. This is the next level I'm looking at though, about the 780, 770 region, right? Oops. Right here. If we are able to break this, the next level I'm looking at, it's not very high. It's this previous lows right here. If we're able to break this, we very well could come up, get rejected, and then like for instance, come up here, get rejected, come back up like this, and work our way up. That would actually be very nice because then you're testing this level of previous resistance as support. We very well also could have this come up and overshoot this, come down. So we need to see what's happening with the narrative of the markets over the next few days. XRP, what's going on with XRP? Okay, we got these giant zones that's kind of trapped in this giant zone right here. We have a downtrend, option T. Guys, let me know in chat right now. Those of you that have seen the BitLab trading stack, this is the current version. You can see, let me show. This is what it looks like with all these on the screen. Do you feel like, there we go. Do you feel like what we wanted to do is make it give just as much data, but also make it a lot easier to understand and clean up the screen? And this is essentially, you'll see the oscillator that we have at the bottom here shortly. But this is a new look where you can have an immediate visual understanding of trend, also reversal and support zones, as well as the EMA moving averages. And then the divergences, we have just numbers. You put on mouse over and you can see, rather than having all the data on there, a lot cleaner. And then we have the VWAP in here. There's a lot of stuff. Then we have dots showing when we, and colored candles when we have high volume support, you know, or reversal sort of indications based on the underlying volume. A lot of stuff in here. Shout out to my daddy-o. Shout out to my daddy-o, Mr. B. Kellam in the house. Now look at this, XRP trying to break down. This looked a lot like what we were looking at with Atom. See this? We have the support right here. Support was lost, and this is continued down. Not only was it lost, came up, the attempt failed, and confirmed a breakdown. Now, if we zoom out on this, this is the 4 hour. We have this key level of support right here, these previous levels. Okay, if we lose this level, then we will likely be coming down. Option F. Look at this. We're sitting right on, look at this, golden pocket. If we lose this level, we could come down to the 786 and bounce. But I do think if we lose this level, let's go ahead and do this. Got a bit of a falling channel. We lose this level, I think we're coming back, down to the 786. We have a confluence with where this diagonal trend line is here, and this would be all the way down to 44 cents. So it's only about 2 cents down. If we lose this level, then we're going to be testing these lows down here at 41. This also very well could be traveling in this range. So I would just be patient here. This is looking like this is bouncing here, so we might tighten into this range here. And if we're able to break this, I'd be looking at this level, option J. I'll be looking at this level, previous bounces and previous support, and the 382 up here at 50 cents. 50 cents is going to be an important level because it's a round number. And if we take this level, I do think we're going to be coming up here to retest these highs. And then from there, there's probably some big news in the market, and we can visit it then. But with that being said, I got to say, have you come over to the BitLab Academy page? Have you given it a follow? Have you hit that retweet? Have you hit that like? We'll be giving away something tomorrow. This is how you enter, by participating in the BitLab Academy community. Come over here, follow us at Academy BitLab, hit this retweet, hit this like button. We randomly draw names from those of you that help support the channel. Make sure you're giving me a follow, which is right here at Kelly Kellam. And with that, I want you all to be patient with all this news that's coming out. Don't get too excited or too scared of anything. The market is going to keep trucking along. If you are scared, all I have to say is zoom out, look at the chart. Pull it up, go back to, look at the chart, and just go like this, zoom out. This is, let's go to the weekly, zoom out on the chart and get a good idea. Look how long this strong uptrend is. Look how long this strong uptrend is. This is what we're waiting for. This is what we're preparing for. So don't get, if you make a move and it's the wrong move, you can always be patient. And if the market dips, what? Close the poll. Oh, I was like, why is my ear dinging, ding, ding, ding? Cancel. Let me close. I don't even know where that screen is. What did you all say on the poll? I said, do you all think that BlackRock is good or bad for crypto? Short term, good. Long term, bad. 43%. 40% said good. 16% said bad. Well, we're going to have to see how it plays out. It's going to be better for those in crypto that are involved and have exposure and have understanding of how to navigate the market before that spot ETF gets approved. So I got to say, if you're watching right now, if you have not hit that like button, if you have not rung the bell and hit that subscribe button, do it right now. Get involved with the space. And with that, I got to run. I got some other meetings I got to attend, and I have a lot of content. I'm shooting, starting the first bit for the long form interview that I'll be doing. That's going to be released on BitBoy, the short version, and then the full version will be on BitLab Academy. That's coming out next week. I have to record that this afternoon with the guest. So without any further ado, hope you all have a wonderful day. Adios, muchachos. Thank you for coming. Thank you for always tuning in at bitlabacademy.com. Hit that like button, sucker.